Good morning, traders. Welcome to Friday of this beautiful week. Kind of a creepy one. Friday the 13th. Awkward. Make sure to swing on over to SSFTG/brief and grab your morning brief levels for all of them. The NASDAQ, the S&P. We've got gold, we've got crude oil, corn, and Bitcoin. Before we jump on in, we always want to double check what the news is for today so that way we're not surprised by anything. And looking at the news calendar today, we've got PPI coming out at 8:30 rather, at 0.2% is the forecast. Previous was 0.4%. Going into 10 o'clock, we have some Michigan consumer expectations and Michigan consumer sentiment numbers. A lot of the Michigan numbers come out on Fridays at 10 o'clock, and to be fair, they don't... I mean, they're ranked as a medium news announcement, but they really don't do much to the markets. Sometimes it does a little bit more, but 10 o'clock probably going to be a non-issue. Today is Friday, so in the afternoon at 1300, we have the U.S. Baker Hughes oil rig count. That's going to give us a little bit of a heads up on the crude oil side of things. And then, of course, all of the natural CFTC speculative net positions going into the end of the day at 1530. So that's going to be the news and everything going on. So now we can jump in for today. Friday the 13th should be an interesting one. First up on the list is going to be the micro NASDAQ, and the NASDAQ is seeing some pretty good continuation to the upside. All things considered, buyers are continuing to pressure the upside and driving higher. Yesterday's attempt to the downside was relatively strong, right? That came with a three-legged push to the downside. The third leg was a bit weak, but when it came time to start rolling back up again, all of a sudden, all these buyers start stepping up to the plate with a good chunk of aggression, and now we've got this little bit of kind of a wedge-ish channel working its way higher, kind of cutting through all of these areas of resistance. Now, the next big zone of resistance, we've got R1, which is resting right at the major swing highs. That's floating at 11,950. That's going to be obviously a zone of interest, but realistically, I mean, the buyers just keep pushing higher. Sellers have won the fight over here, right? We had that kind of double top, quick little poke to a new high, massive divergence, and the market just crumbled back down. But now the market's coming back up again, and we're not seeing that. We're seeing everything showing that this is consistent growth. And if anything, this pullback that's happening right now, like we see here on the RSI, this pullback could be considered cheap. Buyers may be looking to buy into this because this is the first time that we've actually had a halfway decent pullback for buyers to come in on. So although it doesn't look like the market's doing very much, it's actually maintaining some pretty good bullishness that may be looking for continuation back to the upside. R1 objectives, R2 objectives back higher, and right now we're just kind of dealing with this tighter little channel. Buyers are going to want to buy the pullback. Next up on the list is going to be the S&P, and with some pretty good continuation to the upside and resistance coming off of R1 in the previous swings, it's kind of like the S&P is a step ahead of the NASDAQ. This is what we were looking to have happen on the NASDAQ, but the S&P's already been there. We've had some really good continuation to the upside, higher low transition off of the bottom with a higher high breakout. So although we are coming into a previous wedge support, this green line, we're coming into it as an area of resistance. And this is an area where sellers will definitely try, of course, but buyers will be looking at this for another continuation leg to the upside, trying to get things going, given how much weakness the sellers have shown in the bottom. Now, obviously, there is a big caveat because when the market's falling aggressively like this, we put this big peak on, and then the market transitions sideways. Notice right where we are, right? We're right back to the top of that transition point. This is where the market needs to make a decision. It's either going to roll back over aggressively and kick off a new bear trend down through 3,500, or we're going to see a continuation play back to the upside, or we're probably going to start challenging into the 3620s. Either way, we're resting on top of a decision area right now, and it just feels like that decision hasn't necessarily been made yet. We're still just kind of waiting. I like the upside, I like the downside, they both make sense. It just feels like we need a bit more proof. Over to the metals market with gold, and we can see some very nice continuation to the upside. Buyers attempting to break out of this falling resistance. And the market's just kind of grinding higher. We've got some nice channel support coming up. The channel highs might be a little bit kind of wishy-washy. There might be one inside here, but realistically, if they're going to use anything, it would make a little bit more sense to see it a little further up. So as far as upside objectives, it still feels like gold's got a little bit of a ways to go up towards 1888. Buyers continue to pressure to the upside. It is getting back up towards that same area of resistance. We just talked about this on the S&P, where we're creating this bit of a shelf. And although we are making higher lows and everything is looking really good for a potential roll, seeing them back up this far is a little bit problematic. It's hard to want to be a buyer up here and then look for more bullish continuation. It's tough. You're buying high, hoping it goes higher after the market's already been going up for a while. You can kind of tell it's a little bit exhaustive. So there will be buyers who are buying this breakout and looking for a continuation leg up, but there's also going to be those breakout pullback buyers who are looking to come in a little bit later. Just kind of depends on who wants to get hit. But realistically, right now, we've got some nice rising channel support. Everything is lining up beautifully for more continuation to the upside towards those 1890s, maybe back up to the psychological 1900. And then over to crude oil, which is just kind of grinding its way around. There's not really much going on crude oil. We had some pretty marginal movement yesterday. It was really just a big range, didn't really accomplish a whole lot. Kind of looks like a megaphone in the end of things, but it just didn't do much. We made new lows, new highs, new lows, new highs, new lows, new highs, back and forth. Today we're breaking out of that funk to the downside, and this kind of looks like they're trying to get a bear flag. This could also be a large rising support which is coming into play, which is right through here. So that's all the way back to the beginning of November. And we're currently running into the bottom of that. We do also have the wedge top coming down and kind of pinching the market, but it's fairly obvious that buyers are responsive here. Buyers keep pinging off of this area, and although we haven't really seen a decisive rally to the upside, it's fairly obvious at least that buyers are trying to buy the lows of this channel, which gives us a couple bits of information, because obviously that means that the anticipated move is up right now, but if it doesn't go up, or it does go up, traps, and then fails lower, we already know there's a lot of bulls that are potentially stuck on the wrong side of things, and then we could see it flush back down towards, sub 40s and see if they want to get down there. All right, and then over on corn, the market is working its way lower. We've got a nice move to the downside and relatively consistent in the way that it looks. The channel's a little bit funky off the highs. It certainly doesn't look the best in the world. But realistically, there could be a channel off of this, and it might just be a situation where it kind of needed to get this grossness out of the way first, all of this choppy sloppy, and then break down. So we might be able to kind of look for a trend a little bit downshifted. Either way, this appears to be a bear flag, and we're looking for a breakdown back towards 400. The market's working its way lower. We've got 3 lower highs. We've got a bear flag. We're back below support, now potentially acting as resistance. Back up to the pivot point and this area of congestion where everything sort of stacks together around the 412s. That creates a big zone of interest for sellers to try to push the market back down again. And although, when we zoom out a little bit, we can see that the market really isn't necessarily going up or down. It's kind of sideways. We are starting to get down towards these major swing areas, and this is where, when you're in this range bound environment, buyers are going to be looking to fade off of. So as far as location wise, we've got previous major swings coming into play that even goes back a little further, and we're also setting up kind of a left shoulder head. It might be looking for that right shoulder bounce too. There's a lot of things that are kind of gearing up here, but at the moment, corn looks like it's relatively heavy and potentially waiting to fall just a little bit further down. Would like to see that right shoulder form though. And then finally over on Bitcoin, seeing some good continuation rallying to the upside, and buyers have what appears to be a very nice 3-press low, and the market's trying to break back up towards the top of the megaphone. That does put price resistance back to R1, but we just recently broke above 16,000 again, and now that we're back above 16,000, buyers are trying to hold up here. The last time they tried to make an attempt at it, it just kind of fell flat on its face. We went sideways for a very long time. We're now breaking above that, and you can see that becomes a big hot spot for support. We've got rising support on the bottom of the channel. We have narrower support working its way higher, and you have a retest of the previous area of support resistance. It's all stacking up around 16,000, not to mention the psychological level. So buyers are obviously interested here. The problem is, how low do they wait until they start coming back in and feeling like they're missing it? Because it's just not dipping back. It keeps making these really weak lows and kind of bouncing around, but it's not really getting that move down for buyers to buy into. So we might still just be in a little bit of a waiting game. Kind of looks like a megaphone right now, and although I would rather be a buyer, that gives us a clue that we probably want to be buyers on lows, looking to buy pullbacks, looking to buy dips, etc., rather than buying high, hoping that it goes higher. All right, well, that's going to do it for today. Stay safe out there, and like we always say, keep those stops in play and let the winners run. We are going into the weekend. It's a weird Friday the 13th, so hopefully you have a fantastic weekend. Enjoy, rest up, come back on Monday, ready to rock and roll. Have a great one, and we will see you all next week. Thanks.